This is Conversations, a weekly financial podcast featuring interviews with leading investment strategists, noted technical analysts, and other key thought leaders. Brought to you by the Market Technicians Association.
Today we'll be having Steve Suttmeier, Chief Equity Technical Strategist at Bank of America Merrill Lynch Global Research. And Steve will be presenting key macro backdrop charts for the second quarter and beyond, and screens for stock selection. Steve, welcome to the show.
Thank you, Alex.
Nice to have you with us. The interview itself will be videoed and also played as an MP3 podcast file, along with the presentation itself, which will be available with all the UK chapter monthly meeting archives. And with that note, let's begin the interview. Steve, could you please give me some information about your personal and educational background before getting involved with technical analysis?
Well, that's kind of hard because my father was a bond trader and followed technicals for years. So essentially, I probably have seen charts since birth. Actually, it's not totally true, but it's close. My educational background, is just like anybody else in the States. I mean, went to college. I did not study business. I studied biology and English, so with a desire to go to pre-med. English writing, and that actually helps in research because a lot of people think research is fiction anyway, right? But it's not. It does help though, come up with good ways to present ideas. I got into finance because when I got out of college, the job market was very difficult. I graduated in the early 1990s, so I've been involved in the financial markets for about 20 some odd years. So I took a job actually initially in a brokerage firm. If you've seen the movie Boiler Room, it was pretty much just like that. So that was pretty true to the fact. But eventually, to make a long story short, I did go to work for my dad for a little while. He taught me a lot. I taught him a lot. He was a self-taught technical analyst, so he learned from the markets. I never traded until later on, so I learned from books and then learned from the market. So I taught him some of the stuff I learned from the books. He taught me some of the stuff he learned from the markets. And then I moved on my own. I worked in different shops, smaller firms, initially hybrid fundamental technical role, then technical, then fundamental for a couple years. I did small cap equity research. And then I went to Merrill Lynch because I wanted to go to a big, secure place. Well, lo and behold, I joined Merrill Lynch in 2007, March, and by the fall of 2008, Merrill Lynch ceased to exist. So no matter where you go, the one thing is that constant is change.
I understand, yeah. Okay, and so you mentioned, of course, actually you've answered my second question, which is how do you get first involved with technical analysis, which I guess it would be through your father.
I gave you two for the price of one.
Yeah, yeah.
Yes, that is definitely a big part of it.
So I'll skip right to the third question. I'm sure you haven't seen this, have you?
No, I have not.
The third one is, could you please describe your day-to-day responsibilities and the most challenging aspect of your job?
Well, the most challenging aspect of the job is the first part. I mean, basically, most of the big firms, most of the banks, most of the institutions are making you do more with less. So the biggest responsibility is getting everything done that needs to get done. As far as an analytical standpoint, there's a lot to look at. So the biggest thing is filtering it down to what's most important. For me, it's absolute price strength, relative price strength, and volume. That's really the nuts and bolts of the research that I like to conduct. I think I forgot one part of your question.
Yeah, and what is the most challenging aspect of your job?
Well, basically, it's just just the difficulty of balancing everything, because I service both global private client. I service institutions, so it's long short funds. It's the long only managers. So it's just really balancing between the retail and institutional folks at the company. And it's just managing, the business, really. I mean, when you think about it, because when you start doing this from a level where, you're running equity technicals, it's not just doing the analysis, but it's also doing everything else. And when I was working with Marianne Bartels, who was my predecessor in the role, I could focus on doing analysis, and I had limited meetings and things like that. But now it's like I have to do the analysis and all the meetings, and that is the most challenging part of the job. no question about it.
And okay, now we, although you briefly touched upon it through the reply to the previous question, is could you please talk about your favorite tools and techniques? What do you specialize in?
Sure. As an equity technical analyst, because I've done fixed income, I worked as a fixed income analyst also, but equity technicals I like because there's so many things you can use. I mean, you are able to look at the overall broad strokes of the market, then break it down to a sector perspective, and then look at which industry groups are working, and then go down to the stock level. So by breaking it down that way, you can get to good candidates to buy, good candidates to sell, just by looking at basically what the trends are from the larger part of the sectors. The other most important thing, as I mentioned before, is relatives, and that's where all the sector stuff comes in. I mean, I like a stock that has a good, solid, absolute price chart, but also has good relative confirmation. I'm not saying the relative has to be breaking out to new highs. My favorite ones are the ones that are doing well on absolute basis, but all of a sudden they're just starting to turn relative. And a lot of times when I see that, that's when the real absolute trend starts, because if you're in this market and you're running a portfolio, you're checking your portfolio at the end of the quarter. I mean, not everybody does that anymore. A lot of people now are in nanoseconds, but quarterly you're looking at, hey, this stock's underperforming, I gotta get out of it. Hey, this stock's outperforming, I gotta get into it. And there's a catch-up trade. So that's one thing I discovered. Volume is important. I look at it differently. A lot of technicians have abandoned volume because they don't know what it means anymore. And they have valid points, high frequency trading, dark pools, things like that.
Yeah.
But if you just throw like Bollinger Bands on top of volume and just look at when volume breaks through the upper end of the Bollinger Band, look at your price action, it kind of tells you something about going on with the stock.
Bollinger Bands on raw volume data.
Yes, I do that. I have a screen that I use called 90-day price and volume breakouts and breakdowns, and it really helps me figure out what's moving on volume. And usually when something's moving on volume, there's if it's breaking out or moving up with a wide range day to the upside, somebody's buying that, and it gives that gives me indication of that. Same thing on the downside. Now in a raging bull market, is there any value to 90-day breakdowns where you're breaking down? Sure. May not be on an absolute basis, because a lot of those breakdowns fail in a raging bull markets, but on a relative basis, most of the time those breakdowns from 90-day breakdown screens underperform. So that's the way I try to look at it. So you get underperformance, and that's where the relatives come in. So it combines all three.
Got it. Which also you've answered my next question as well.
God, I'm good, aren't I?
Groundhog Day. It is, okay, so for the sake of completeness, what's your approach when you're looking at the chart? So obviously we've gone through that, so we'll be skipping to the next one. I'll be keeping my papers hidden from me. All right.
X-ray vision.
Which people have been your greatest influences? I mean, understand you've mentioned your father was the primary source of knowledge for you. But if I asked you to name 3 top technical analysis books or authors or approaches, which ones would you pinpoint?
That's a great question, and I have read quite a few books out there. But I would say the one that really helped me get through the CMT program, that wasn't even in the curriculum, by the way, was Trading for a Living by Dr. Alexander Elder. I thought that was one of the best books out there. He really put it in a perspective that you can really learn not only how to analyze, but also gives you how to trade. Now, not just how to trade based on short-term indicators, but how to trade with the trend, which is the most important thing. John Murphy has been a great influence. Martin Pring has been a great influence. So I would label those 3 particular technical analysts and as far as the education aspect. People that I like to emulate that have been in the business a long time. I mean, obviously you're looking at, my predecessor, Marianne Bartels, you're looking at my father, you're looking at Dick McCabe, Bob Farrell, Ralph Acampora, you run down the list. I mean, these guys and ladies are icons of the industry. I would throw Gail Dudak in there too. I mean, I remember watching her on Wall Street Week all those years. Fabulous technical analyst, but she also overlaid it with good logical fundamentals. So I think I have respect for that, where people can actually look outside the technical box from time to time and say, wait a second, here's what the fundamentals are saying. Here's the technicals that back up what the fundamentals are saying. So I think that goes a long way with me as well.
Okay, speaking about aligning fundamentals and technicals, if I was to ask you to distill your market knowledge or your approach to the markets in 3 axioms or theories, for example, don't fight the Fed. You meant
Right.
the tape or the Fed. You mentioned about the importance of trading with the trend.
Correct.
Which ones would these be?
Well, I mean, basically, yeah, I mean, just 3 basic rules. I mean, obviously, it's absolute, it's relative, and it's volume for me. But if I'm looking at a big, broad brush market, I have everything in buckets. There's about 5 or 6 of them. I mean, you're looking at trend, you're looking at breadth, you're looking at your volume internals, you're looking at sentiment, momentum, seasonals. That's 6 or 7. Give or take. I lose count sometimes. But basically, the most important in that, if you're just coming up with a market view, would be the breadth confirming the absolute trend. So advanced decline lines are very important to me. Ratios of moving averages, ratios of equal weighted versus cap weighted. That's a new type of breadth indicator people are using now that I think has a lot of value. And you can do that for the overall markets, but also sectors where those indices are available.
Going beyond price, basically.
Going beyond the price, yes.
If you could give a call to 25-year-old Steve, what would you advise him?
Well, 25, I would actually take it back and do it probably 18-year-old Steve, because by 25 I kind of knew what I was into. But at 18, my father had been through the 87 crash. When that occurred when I was 16 years old, but I was going off to college. And I really wanted to go into business, but I saw what this crash did. I mean, my dad worked for a great company. He was a partner of that firm, and one particular area of the company he did not work in, by the way, went under and brought the whole company down. So I'm like, do I really want to do this financial stuff? I'm like, no, I want to do something where, doctors are always in demand. Let me try that. Well, that didn't work out for me too well. Standardized testing has never been my strong suit, except when I took CFA, CMT, all the series exams. In the States, that worked out well. So maybe that was what I should have done in the first place. So I guess the thing I would tell myself is stay with the trend, because 1987 was a blip on that chart, and it scared me. My dad rebuilt his business. He was able to get back on track and do what he needed to do. And that's what this whole career is about, reinventing yourself. I mean, even in the same job, you have to reinvent yourself. It's just the way it goes.
Adaptation.
Yes.
What is your worst trade or market call, and what have you learned from it?
I'm sure there's a lot of them, just like anybody else in this field. Gosh. I mean, I guess when I was early on in the business, not that early, but I did make some mistakes off that 2000 peak with some of those tech names. I didn't sell them. Because I thought, I was of the mindset, because that was the first bear market I saw. If you started in 1994, all you know is bull markets. So that was it. I mean, that was when I had a stock go from a great gain into a complete round turn. Embarrassing. Never going to happen again, but that's how you learn not to do that. So the Pacific stock was a Cisco. Man, I looked like a genius until I sold it for break even, a couple of years later. I just got tired of holding it. I mean, that turned out to be the right thing to do, but obviously, Cisco wallowed for years, but,
You learned through experience.
I didn't trust the technicals, basically. I'm like, yeah, everything's rolling over, but I'm like, I think it will work out pretty well. I thought it would work out better than it did, So.
And fun fact, what does Steve do outside of market hours? I mean, do you have any hobbies? How do you relax?
Work takes a lot out of me. I try to bike. I try to play with the kids. I got a daughter who's 6, a son who's 2.5. Spend time with the family. I'm an avid Star Wars fan, so I do stuff with that. I collect some of the Star Wars memorabilia. Swimming in the summertime, that kind of stuff. So. It's
relaxing.
Yeah, pretty much. I mean,
spending time with the family, the most important.
That's the important thing. Yeah. Yeah, so I enjoy doing that.
Okay, well, I think that about wraps up today's MTA podcast with Steve. For the MTA, my name is Alex Spiroglou, and we'll be seeing you on the next MTA podcast interview. Steve, thanks so much.
Thank you very much, Alex.